Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, December 29th. Today is also kind of a quiet day as we've been kind of experiencing, as you may know, the big traders are out, the hedge fund guys are out on vacation, so we got very light trading volume on the markets today, as well as most of this week and even part of last week as they hit the holiday vacations and such. Tomorrow the markets will be closing, or at least the bond market will be closing about, I believe it's 11 o'clock Pacific Standard Time. Stock market will be normal, and then of course Monday both markets will be closed on Monday in observation of New Year's Day. So let's kind of take a look at, we only got one economic news release scheduled for today, and that's the weekly jobless claims. So last week we had 275,000 people apply for unemployment. Forecast for this week was 270,000. It came in at 265,000. So definitely an improvement there, especially when we had a few that dipped below 260 range for a few weeks there. But I think we'll get a better gauge of this probably in January once the temporary jobs have subsided and the holiday. A lot of those people may go back on unemployment that were working temporary positions. So I think it might give us a better picture of where the job market really lies. Let's go ahead and take a look here at the headline news. Stock market, again, down a little bit. It's light trading. Again, it seems like what they call the Santa rally is kind of getting exhausted now. The Dow is trying to hit 20,000, and since then it came really close, and right now it's kind of pulling back a bit. And all three markets are kind of on the negative side, are down so far today. Bond market, on the other hand, is having a nice little rally. So this 3 days, or at least 2 days in a row, we've seen a higher high and stuff. So this is good. We even have this little wick where it looked like it tested. So it kind of covers this basis over having too big of a jump here. So if we start here and we have this opening gap, sometimes what happens is that it needs to fill in the gap. We would come down. We would have to close down further. But in this case, it did test the first resistance here and came back. Now we're testing the second resistance level, and we'll see if we can maintain that. We're up about 25 basis points so far this morning, which gives us better pricing for interest rates today, which is obviously good news for a lot of us. Again, the 10-day moving average is right around here. Again, we did rally past the 10-day moving average, where we rallied so far above the first level resistance, and now we're trying to fight the second resistance. If we can get above this, we might have a little springboard and get at least in the mid 102, 103 range here, which would give us a lot better pricing than what we've been seeing over the last few weeks here. Let's see if we can continue this. Next week, we'll get a better gauge of where the market will be once the head punch guys come in. We might see bigger swings in either direction. Again, so be aware next week we could see a little bit more volatility as the big boys come back to play. All right, folks. Again, it's kind of a light day today. If you want to get more updates, just stop over at Twitter. I could be found at Mike Bjork. You can find me on Twitter, and I do updates on Twitter throughout the day on about the market. All right, have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Take care. Bye-bye.